Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 14th July 2025. Donald Trump announced a 50% tariff on copper imports into the US. This decision worries India's electronics and semiconductor industries. India relies on imported high-purity copper. The tariff could disrupt India's chip manufacturing efforts. Industry leaders urge the Indian government to invest in domestic copper production. They also want streamlined import procedures. India's Tier 2 and Tier 3 cities are experiencing a surge in IT hiring, outperforming major tech hubs in the first half of 2025. These smaller cities witnessed over 50% growth in IT jobs, driven by improved digital infrastructure, government initiatives, and the rise of remote work. Over 300 Indian companies became debt-free in financial year 25. Collectively doubling their cash reserves to Rs 50,463 crore. This trend, indicating India Inc.'s cautious approach to new investments, despite recent repo rate cuts, reflects a preference for balance sheet strength, equity funding, and asset-light strategies. E-commerce giant Flipkart has rolled out a new liquidity event for eligible employees holding vested stock options. Employees who are with the company between July 6, 2022 and July 5, 2025 will have the option to sell up to 5% of their vested ESOPs. The buyback price is set at Rs 174.32 per option, with disbursements scheduled for next month. The total size of the buyback will be around $50 million, potentially benefiting between 7,000 and 7,500 employees. Volumes on India's thriving futures and options dropped nearly a fifth last week after Securities and Exchange Board of India's ban on New York-based quantitative trading firm Jane Street for alleged market manipulation. The recovery to the recent peak in trading activity may not happen immediately, which may squeeze exchanges' earnings. Blinkit is overhauling the way it works with sellers on its platform, shifting to a model where it will directly sell to customers and hold inventory on its books. The Zomato-owned quick commerce company has begun notifying partners about this change, which will come into effect from September 1st. As part of the transition, Blinkit will no longer require sellers to maintain multiple additional places of business under the GST registrations for every state where the company operates. Until now, sellers had to declare additional place of business in each state where the inventory was stored in Blinkit's dark stores and often secured separate FSSAI licenses as well. This created a significant compliance load, especially for small and mid-sized brands scaling across geographies.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.